Hi everyone, no major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Starting off with fear and greed, you can see we are back into regular greed. We've been there for at least a week now. A month ago we were in extreme greed, but now we're in regular greed at 70. Let's look at the timeline. We did have a lower high on this chart, peaked out at 74 versus this 76, 77, 78 area where we had been topping out. So that is a little bit of a bearish indicator. We didn't make it nearly as high. So clearly divergence there, and then momentum, extreme greed, strength, still extreme greed, breadth still hovering in extreme greed. Put call ratio did step down to regular greed. Market volatility in neutral, continuing to bounce off of that 50-day moving average. Safe haven demand, bond demand, no change here, still at extreme greed. Moving over to seasonality, this was supposed to be the weakest day of the month, at least relative to election years, and it ended up to be pretty bearish for the NASDAQ. The Russell was actually up a little bit, which was nice, but the rest of the markets were down, and it did end up giving us that lower low here on the NASDAQ, so definitely interesting. We'll see if we get a bounce into the Monday session like seasonality suggests, and then sideways chop for the rest of the month. I would argue that based on the charts, it probably looks a little bit bearish going into the rest of the month, but just understand that that is the move for seasonality. Moving over to the calendar, you can see we did get that triple witching for Monday, Tuesday, relatively bullish. We talked about that on the last chart, and then bullish for that Friday session, and then no indicators here for next week. And then don't forget Good Friday, that's going to be a closed market for the 29th. Moving over to the economic calendar, there was really nothing on the calendars for today, just imports, exports, which were fine, no changes from expectations, slightly bullish on exports, which was good. And then looking at the Michigan data, inflation for 1 year, lower than the forecast. That's good. Consumer expectations, below expectations, as well as consumer sentiment also below expectations, but it didn't have a huge effect on markets. It is interesting to see those weaker numbers for inflation and consumers, though, from Michigan. Moving over to Max Payne, you can see here, finished around that 510 level. Max Payne jumped up to 516. Total options, just over 5 million. Put call ratio went way up, 5.5. What a crazy number. Obviously well below that 520 level, well below 515. That 510 that we talked about as the first put wall is where we ended up finishing. And that's actually very close here to the bottom of the call. So that is a very weak finish here for Max Payne and for the options market. So just keep that in mind. That's quite bearish going into next week, in my opinion. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily, you can see we did continue that down move. We had consolidation, slight push into the end of yesterday's session. Could not hold those gains. 21 EMA on the hourly, definitely resistance. Couldn't really get above the 9 EMA either, so that's quite bearish. And you can see last candle of the day was actually selling, so that is not a great indicator either. And you can see on the day down almost 1%, and it's definitely down more than 1% after hours, 5.12% on the SPY. Big move, so you got the 21 EMA as support right now at 508.36. If that breaks, this is going to be a very strong move in my opinion. You got the 55 EMA down at 493.10. Momentum bearish, RSI bearish. You can see big selling volume on those two candles, and it does seem like markets have topped at least here in the short term. Moving over to the tasty charts here on the SPY for the daily chart, you can see that candle yesterday actually closed much more bearish. You can see here it actually closed right at that 9.8 EMA at 512.64, and then we gap down about $3.69. So it finished lower yesterday, and then it finished even lower here today. ATR support would be down around that 499.50 or so. We'll see if we get to that point. I would expect to, based on what we've seen here. Momentum, massive selling volume here on the RVol. Momentum bearish. Everything says that this is set to go lower. And then looking at it here on the hourly chart, you can see we did hit that third ATR band to the downside, just like we did yesterday, which is a pretty bearish indicator. You can see overnight price action allows that ATR to go lower. We did find a little bit of support here from the lows on March 11th in the pre-market. I would expect that to break tomorrow, and then we start to see some significant lower lows. But first push, sell, hold, second push, sell, held, and now I'm expecting more selling in my opinion. Moving over to the NASDAQ here, you can see similar thesis, big selling early in the market, really on that first candle, but it was still pre-market, and then 438 definitely broke, and it went way lower down to 433.24, broke that level and ended up bouncing a little bit, but we did hit the next support. You can see this downtrend that's forming, 55 EMA down at 425.41. I wouldn't expect anything to hold until we at least get to 428.50. Might see a slight bounce up to this trend line. You can see that trend line sitting up around 439. That would be a resistance. 438 also as resistance, and I would expect lower lows here at least until we hit that 55 EMA. And then look at the volume on the selling. Massive momentum to the downside, massive volume on that candle, just like we saw on this selling candle here on Friday of last week. So big selling across markets, and it looks quite bearish. Moving over to the Tasty charts here for the NASDAQ, you can see similar thesis, massive R vol on the 8th, and then massive R vol here today. Both of those big selling candles. You can see the midline broke. We hit that 34 EMA at 432.74. And then you have the ATR support down here around that 427.50 area. We'll see if those areas hold, but right now this is breaking a bit lower than we've seen. We did see a test of the 34 back here around the beginning of January, which did end up holding, but if you notice, the R vol pattern was not nearly the same. So we have lots of selling at a market top, and then we're now testing those lower levels. So everything here says that this is bearish in my opinion. And then moving over to the hourly chart, very similar thesis to the SPY. We have a low, lower low, lower low, all at that third ATR band here on the hourly chart. Tons of selling volume on those down candles. ATR resistance up around 438.20, midline right around 436.75. So a couple of resistance points, and this does look like it's set to go lower in my opinion. Moving over to the Russell and the Dow, you can see the Russell was up 0.19%. Momentum still bearish, RSI still bearish. Volume on that was pretty decent, so still holding that 201.88 level, pretty interesting. And then the Dow breaking below all structure here. You can see below all the trend lines, gap through everything right to the level 387.77, and then fell more on the day, so 0.79 to the downside. Momentum bearish, RSI bearish, and you can see this RSI has been trending lower for a while, and now this is definitely a break. So 55 EMA down at 383.34, and I would expect it to start to hit those levels. 382.20 is my next support, is just below that. Moving over to the MAG7, you can see this fell as well, 0.95%, gap through the 9 EMA as well as the level here, almost hit the 21 down at 342.33, that's your current level of support, and then resistance just above that, 349 or so. Momentum bearish, RSI breaking down further, volume ramping up as it is breaking down, which is not a great indicator, and if this 21 EMA breaks, you can see there's a lot of room technically to the downside. Doesn't mean we couldn't find some support around 332.20 or so at these previous highs, which is certainly a possibility, but really I'd be watching that 55 EMA. Moving over to Apple and Tesla, Apple was down 0.22%. You can see it's still holding the structure here at support 170.90, so that structure is still holding. And you can see volume actually came through pretty bullish on that candle right at that 170.90 level, so if you want to trade off of that, it does seem like a decent setup now that it's built some kind of base. Momentum continues to roll towards bullish, so Apple showing some strength. It's down a little bit after hours, but nothing convincing. And if it does hold that level, 176.15, and then the 21 EMA at 177.11 does seem possible. So another $4 or $5 of potential upside there. And then looking at Tesla, actually held up okay, 0.66 to the upside. Momentum and RSI still very bearish here, and you can see the structure very bearish. Price target still at 152.43, right at this level here at the support, as well as that trend line. Moving over to staples and discretionaries. Staples down 0.04, so it's holding up well. Did test 75.40, big gap down as well, down to 75.20, and then ended up rallying all the way back to the trend line, so held in there pretty well. Momentum still bearish, RSI breaking down a little bit, but not nearly as bearish as discretionaries here, so clear rotation out of growth. 1% to the downside, almost hit that 55 EMA at 177.46. That was the level here after 180.10 broke, and I would expect it to at least touch that one time. Momentum bearish, RSI definitely bearish. Next support for me would be 174.76. Moving over to breadth, both of these continued to trend downwards. Big candle yesterday, another big candle here today on the 20. Momentum and RSI both very bearish. And then looking at the 50-day average, continued to trend down but didn't break any levels. 68.66 got tested for the second day in a row. Momentum bearish, RSI bearish. 21 sitting at 68.01, and then if those break, 62.25. And at this point, I would expect those to break. Moving over to yields, these continue a pretty powerful move at this point. 5 days in a row of straight up price action. Momentum bullish, RSI bullish on both of them. And they actually both hit the 144 EMA on the same day here. Level of resistance 4.35 on the 10-year. and then 4.81 here on the 2-year. Moving over to the dollar, held up okay, and it was slightly bullish on the day, 0.08%. Obviously not as powerful as the Thursday candle. We're up over 0.5%, but momentum rolling towards bullish. 21 EMA at 103.6, and it does seem to be moving pretty aggressively. I would expect to break through those 103.6 areas, start to push to that 144 EMA at 104.2, and then my resistance here at 104.4. Moving over to JNK and TLT. JNK actually held in there, 0.01 to the upside. Momentum bearish, RSI still bearish. Still in the same consolidation for the past several months, nothing changing there. And then TLT did go lower, not as powerful as Thursday once again, but still bearish on the day, 0.03%, and it is holding that 92.82 level, very important. I have some trend support in the 144 EMA down around 92.50. If that area breaks, I would expect a pretty significant down move. Let's go ahead and extend out this trend line here. That would give you some support around 91.50, and then my next level at 89.16. Moving over to the VIX here, you can see we did actually wick a new high at 15.53, hit that upper trend line and then rejected back into that 9 EMA area. Momentum bullish, RSI bullish. I still expect this to push up into that 17 area, at least within the next couple days, and then 18.50 is certainly a potential. You can see we almost got there here in mid-February, and I would expect it to get into that range over the next couple of weeks at some point. Moving over to my accounts, I did okay considering how bearish things were. You can see the NASDAQ was down over 1%. The Russell held up okay, made some money on that call, and then I rolled it out another expiration here, 202 for the Monday session, collecting another $1.24, and I believe that's down a little bit after hours. You can see about 20 cents or so. So trying to collect another $1 on that, and then you can see here on the Qs, still doing the poor man's covered call, so still collecting money on that. Between the gains on the IWM and the poor man's covered call, you can see I was only down $45 in that account, so pretty good on the day. And then here on the Qs, obviously I was a little bit bullish going into the session and we got crushed really early and it was hard to make adjustments, but I was able to make up a little bit of those losses. So based on the 200 shares, I should have been down over $1,000 and I was only down about 700. So that's a pretty decent outperformance. And then you can see I'm more defensive here. So I sold some 432s for $1.27, trying to collect about $250 on those put positions. And that's about $2 out of the money or so. You can see we finished right around 434 or so. So $2 out of the money for another $1.27 credit. So actually buying the stock down around 430.70 or so. So playing a little bit more defense, just trying to collect some money on the puts. We'll see how that plays out. But right now, definitely more defensive going into the Monday session based on the weakness we saw across markets. Let me know down in the comment section what you think of the markets. Are all the structural breaks going to follow through, or is this still short-term pullback and we'll see a double and we'll get at least a double top potentially next week? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.